Hello and good day, everybody. JJ Edwards here with live trading. I will be using ICT, order flow, and volume profile VWAP in my strategy, also patterns. Um, I can see one opportunity on the chart. Just one moment. Okay, let's start over. I am JJ Edwards here with another live trading and tape reading with live trades during New York session. We are currently, one moment, something around 10 minutes, less than 10 minutes left to market open, 13 minutes to market open. Over here, you can see we had a new high at the value area high, and then a fair value gap tested and ripped lower. The market came back again to the scene of crime down here on CVD, or cumulative volume delta, made a new high. The price failed to make a new high. That's why I took this short order. I trade based on volume profile, VWAP, order flow, and I also utilize fair value gaps, chart patterns such as rounded cup, and my favorite, which is head and shoulders patterns on my execution. This is for educational purposes only. Everything that is demonstrated in this live should be considered as educational content. I am not a financial advisor, and trading has a significant risk. Uh, and my aim, my mission is just to teach you how you can learn trading, cut losses, cut losses, money management, and also get familiar with volume profile. Volume profile is one of the most extensive and valuable tools that we have in trading. Let me explain this trade one more time. I have just one moment. I have to focus a little bit over here. We have the point of control here at 25,185 and a gap in here. So I would like to close one trade slightly above this high volume, which is 25,189. You see that over here in the cumulative in the volume profile, we have a significant volume in here. Since the price is above this level, it can provide support, and the price can bounce from this area. So if I go to my chart trader, I decrease the contract size to 1 to close one trade here at 25,189. 25,189. Okay, I set one buy limit in here. In the volume profile, we have three main levels: value area high, which is demonstrated here; point of control, which is demonstrated here, POC; and then we have the value area low, which today is at the lows. So value area high, simply put, means resistance. That's the highest price buyers were willing to buy Nasdaq. In this case, we are watching at Nasdaq future chart, 1 minute. Point of control is a fair price. It's a price that both buyers and sellers agreed to pay at a fair price. They were kind of agreeing on that. Value area low is a price that acts as support. It's the lowest price that sellers were willing to pay. That's why it doesn't go lower than that level. In here, in this example, on this live trade, we took a high. We went all the way high right there. And then the price kind of inverted while the value area high was here. The volume is thin at this point, making this high. This is a swing high. The price ripped lower, made a fair value gap, returned to the fair value gap to fill more orders, and then it switched lower. I couldn't take this leg, but once the price returned to this near this fair value gap, and also, let me show you this tiny volume imbalance, this gap didn't trade. It returned to the gap in here. Allow me to also mark this. So we have a gap in here. Once the price returned to this gap, I saw that rejection. I executed 2 contracts. I would like to close 1 contract at this high volume area. I left the stop all the way up here. Now I can move it because we do have a rejection. Now since we had a rejection, I can bring the stop to lower area, to a lower price. So that's the strategy. We will be here for half an hour, maybe 45 minutes. But the final video will be shorter because I will cut the fluff and the parts the price is consolidating. We are 7 minutes, more than 7 minutes, something like 10 to 12 or 15 minutes to market open. Usually I never trade before New York session. I never trade Nasdaq before New York session, but I have seen these opportunities. I turned on my laptop, set my microphone and my camera to record this for educational purpose. Now, as you can see, the price is having a dip. The risk to reward is very decent. It's more than 2. The point of control is at 25,189. And maybe I close 1 order at point of control, which is because we are getting close to New York session. I rather to close all trades at this area. One moment, let me adjust it. See that we have a down close candle. I want to close it right above this down close candle. Let me see. Yes, that's correct. Okay. You're risking something around 360 points or 36 points to get 147 points in here. The market is about to open in 10 minutes or so. That's why I like to close this order before the market opens. Usually when New York session opens, the price has a high volatility. In that scenario, I don't want to be in my trades anymore. But I do like this value area high during the New York session or the opening bell. The price can potentially jump higher and get back to this value area high, and then attack the lows. Over here, if I go back in the chart, I have these equal lows that the price can potentially target. So what I do is one day, usually on Monday and Wednesday, I will do tape readings. Mondays, I will do ICT tape reading without order flow, and Wednesdays is the order flow day. I will do tape reading and execution using order flow. There we go. And now we have that. We are at the point of control. I want to see how the price reacts to this level. If I see a tail into this area, I might like to go long on Nasdaq, because this area is a point of control, significant support in here. I would like to go long and perhaps target these highs. One of them, maybe this fair value gap, because this fair value gap hasn't been traded yet. So what I do, I go to my chart trader, or maybe one contract, because now we have that tail. Now we have that tail. I also have the order flow platform. I see 10 contracts are coming. Let's trade with the whales. I would like to leave it here, maybe. Stop. I want to put this stop below. Okay, the market, I guess, is about to open. If the price gets here during the open, 2 minutes to open, I would like also to sell again with more contracts at the value area high. As I said, value area high acts as resistance. It's a value area, it's a price area, it's a price range that nobody is willing to pay a higher price unless the Nasdaq or the price spends a lot of time at the point of control to make this area thicker. Okay, now to make this area thicker. If I see this area thicker, that means we have more buyers, we have more participants, and the price can potentially go a lot higher. We have a lot of buyers coming in, 10 contracts. 1 minute to Nasdaq. Market doesn't act as easy as today. Usually it's not like that. But today, when I saw these easy setups, I rather to record this video and run this education content on my channel. Okay, the market is open. The price return made a tail like a hammer candlestick right at the point of control, slightly higher, did not take this low. That is bullish, at least for very, very short term for Nasdaq. This time I only executed one order, not 2 contracts, only 1 contract, because we are at right at market open, New York session market open. I would like to sell as soon as the price gets here. So let's have 2 contracts of sell limit there. If it goes above this, I would like to close it. So I do buy stop right there. If my seller stop is active, it will take my buy stop and I will be out of this trade. For the current 1 contract buy open, the market is about to start during New York session. Let's see where it goes. The market is open. You have 10 contracts in, 30 contracts. Let's see these 30 contracts. Are they going to do anything or not? Let's bring this stock to break even. Let's bring this stock to break even. You see, the market is bearish because, again, cumulative volume delta almost neared these highs, but the price still failing to make a new high. Nasdaq is bearish, but that doesn't mean we can't scalp. We can run scalping strategies on short term. 4 minutes to market open. It might go ahead and take profit before the market opens. Let's see. Almost there. I did not leave my TP at this high because this gap is already used. I'm going to delete it. What hasn't been used is this fair value gap right there. This gap hasn't been used only once, which was right after this dip, which is normal. Since the price didn't spend enough time at that high, it is logic for it to return back to the same area to fill more order. In this case, we are talking about sell orders. 3 minutes to market open. So this strategy, once again, I'm using value area high. Nasdaq is up today, was up significantly. Oil prices are down. Nasdaq is up. We have a gap. You see that over here? We inverted this gap. Let's see if Nasdaq respects it. This is also another reason why I would like perhaps to buy another contract right there. Make it 3 contracts. TP is still the same. Small stop level. The market will be open in 2 minutes. Since we have inverted this gap at the point of control, this is very important, guys. Listen, we are at the point of control and we are seeing reversal, but that is a short-term reversal. Okay, it took my stop. Let's go long again. One minute. Let's go long again. I would like to leave the stop a bit lower, leave the TP at the same area. The setup is still valid. It just tailed. You see that? Now I can do one contract again at the same, because we have that tail. A lot of buy orders, a lot of orders are coming in actually. Okay. All right, the spread did not. Okay. It did not take my order. Now it is, because we have a spread. Look at the spread. Spread is very high. The spread took my order, not the price. Now what I want to do, so that for the second buy order was a loss. I would like to exit one contract below this low. So I would put one buy limit here. And if the price returns to this gap, I would like to have another sell limit order right there, another sell limit here. Let's see if we get the fill. If you're lucky, we will get a fill. This is very bearish for Nasdaq. It is bearish because look, the volume profile is dipping. We have a new high, and the price did not make a new high. Look how big the spread is. The price is all the way here, but the spread is all the way up here, because the market just opened. We have buyers stepped in. See that buyers stepped in. We have there. It's below my pending order. Look, it didn't close my order because of the spread. This is bad. I don't like I don't like it when things like this happens, but okay, the spread, come on. If the spread hits me, all right, the spread finally hit my first partial. Now if I go to 5 minutes chart, maybe I can find another exit for my trade, maybe final profit. We have one low in here and another low over there. We have another low here. This low has a gap. So I don't like to target lows. Sometimes it's better to target gaps. Okay, this gap. Okay, that buy stop did not come into play. Let's put this stop right at the break even. Now we're looking at the 5 minutes chart. I would like to have this okay, our profit is here, 5 minutes chart. What I want to do is usually when the New York session starts after quite some time, let's say 20 minutes, 30 minutes, what I would like to do is to have another volume profile shifted to the right side. And over here, I go to my settings. I will say, all right, let's have it custom. And for the custom, I'm going to have the New York session only. For the custom, make sure I write. All right. So now I have the custom. I go back to 1 minute chart. And I would like to target the first candle of New York. So the point of control is here at New York with 541. That's a lot, guys. That's a lot. This means we are going to have a bearish day. So I won't be closing that order, and maybe I add one more sell. Let's have one more sell. I would like to cancel these limit orders. I would like to move my stop to value area high. This value area high is the highest price that buyers they were willing to pay during the New York session. Therefore, I bring my stop right there. My profit remains at the same area, which is lower, 25,106. You're having another high. If I see this candle is closing with a tail or bearish, I would like to add another sell position after this minute. Let's see how this candle closes. We have a ton of sellers coming in. Look at the cumulative volume delta again coming higher. 1, 2, 3, 4. 1, 2, 3, 4 up close candles. These are slightly below the point of control of the day. Now we are closing bearish. I would like to have a little bit of bounce here. Okay, let's go and sell it again. Okay, we are 3 contracts in. Profit remains at the same area, which is lower right there. Why did I put my here? Look at this area. It's very thin. So this thin area, especially here, can provide liquidity to whoever wants to go long later. Because I have thin liquidity in here, I can close them. This low is fragile. I'm not going to put my limit or partial taking below this low. That's the first low of New York session. Very fragile. Never trust the first low. First low and things like that, they are kind of very, very fragile. Once I see a break below this level, I will move this stop all the way to this high. Look at the volume profile. The value area low price is below the value area low. That is very bearish for Nasdaq. Spread is still high. It's very high. It might not even take my order. I don't like this. Why the spread is there? Maybe I close manually. because of the spread, I might not be able to close my trades at the prices I want. Spread is very high. It's a very high spread, which is actually messing with my trades. I did not experience this before. Okay, that sell order is now taken. That buy order is now taken. We have two more contracts in. Final is here. This is the final target. Now I would like to bring this up to value area low. Now this value area low will act as resistance for us. I'm bringing my profit higher because of the spread. It's a crazy spread we are experiencing. Massive spread on Nasdaq. Look at that. Okay, you see this breakout is real because cumulative volume delta also made a new low. So I'm confident in this trade, but I don't know if it can, if it would allow me, if it would take my, look at the spread is here. Okay, let's get out there, maybe here. Okay, you saw the spread. I didn't know what's going on. Anyway, I guess that's enough for this morning. We had a few successful trades on Nasdaq. Once again, guys, thank you for watching, but I would like to go through these process again. Mondays and Wednesdays, I will do tape reading. Monday will be ICT tape reading. Wednesday will be about order flow tape reading. Because these two are slightly different, I utilize both of them in my tradings. But some people, they don't like volume profile, or perhaps they don't want to spend a few $100s to buy data, to pay for the platform and things like that, but that's okay. ICT works, not as good. Of course, there's a huge gap between ICT and order flow. Order flow traders, definitely they're more successful than ICT traders because they have access to what's happening behind the market. Like what you see here, I know where the value area high is, I know where the value area low is, I know where the point of control is. Well, ICT traders, they cannot predict that. But I will do tape reading ICT this Monday. Tuesday, Thursday, and Friday, I will be live. That's where you guys can come to live chat, ask me questions. I will do the same thing live, but in live, I will be able to answer your concerns and your questions. The reason I go offline, I record these videos because I can be focused and teach what I want to teach. Otherwise, this video would take much longer when I concurrently answer the chat. Okay, guys, thank you for watching. I hope you enjoyed and you learned something from this session. If you have questions, if there's any part of this education that is vague for you, please do not be shy. Write a comment and I will make a video, or perhaps I will mention that in my next lesson. Thank you for watching. I love you all, guys. Have a good one and good day.